Hello friends, there's an old saying in Wall Street, a trading profit is the most difficult, easy money you'll ever make in the markets. If you have been making consistently small profits or you're making small profits once in a while but big losses eventually, this video is for you to see and address this issue. I'm Vijay Bambwani. I'm a trader since 1986. I've been trading these markets as a professional trader for 36 years, and my videos help you become a far better trader than you are currently. And yes, all my videos are free. My indicators that you see on my social media accounts are free as well. So let's dive right in. And like I promised you, this video is about addressing the issue of eating like an ant and shitting like an elephant. So smaller profits and bigger losses is what most traders suffer initially, and as they get more and more proficient, they learn how to get over this problem, and that's what this video is about. So trading is a very serious business. It's just like any other business. A lot of factors need to be taken into account before you realize your optimal return on investment or ROI. And only after you do that can you call yourself a successful trader. And if you're keen on being a professional trader who can run his house purely on day trading income alone, you need to get big bang for your bucks, and each trade should be yielding sufficient profits for you to actually think there's something significant on the table for you to have picked up. Now, in trading, you may be taking pretty high probability trade setups which have a good chance of succeeding. But you may be making consistently good profits, but small ones, right? Consistency is very good. But if the amount of money is too small, hey, that's not really going to pay all your bills. So are you actually taking the best possible trade that can give you the most amount of returns per trade, which is what it's all about? Remember, we traders are capitalists. We want the highest amount of money in the shortest possible time, and three, with the most controlled and defined risk parameters. So once all these three parameters are met, you have taken an optimal trade. Now, as a shop owner, supposing I'm a shop owner selling this t-shirt, I calculate the buying price of this t-shirt and then the cost of electricity, telephone bills, salaries, rent, etc. And I add that as a factor to each and every garment that I'm selling. And then since I've added it to my CP or cost price, I need to mark up my SP or the selling price to be able to make money. Are you taking all your costs and then marking up that trade so as to get a higher take-home profit? This is something that I'm going to teach you about in this video. Now, as a trader, you need to monitor what I call a trade efficiency ratio. This is not something that you'll find on Google because it is a term that I have coined, and it's not rocket science, all right? It's extremely simple. Now, this is nothing but all the execution costs, taxes and commissions like brokerage, GST, STT, which is securities transaction tax. In commodities, it will be CTT or commodities transaction tax, exchange transaction charges, stamp duty, and SEBI turnover taxes. Now, your profits, take-home profits, after deducting all these expenses, should ideally be 2 to 3 times above and over and above these charges. The higher, the better. That's what makes you an excellent trader. So now your ratio is nothing but your take-home profits compared to your cost of trading. Now this means that you take ideally those trades where you're riding very large absolute rupee moves and you're letting your profits run and you're cutting your losses short very, very shortly. But how much of an intraday move of any particular security can a good trader capture before he's called a good trader? See that thumbnail on the side of the screen? That's a video which I have recorded specifically to solve this problem. Whether you should capture 25% of the intraday move, 35%, 50%, 60%, 70%, how much is the percentage move of an individual security that you're trading should a trader capture before he can be called a mediocre or average or an above average trader? Please do watch this video. It's loaded with information that you really can't do without. Now, the hyperlink to this video is in a pinned comment in the comment below this video, in the description below this video, also in the end screen that will come in the end of this video. Now that you know what you must do, how much of the move you must capture, you may think that you've cracked the code. All right, Vijay told me I must capture bigger price moves of this any particular stock that I'm trading, but hey, I'm not done yet. Now, how do you know which stock to trade? Whether the stock will actually move at all. Now, if you've basically seen some stocks, they are actually laggards. They are sloths. They don't move at all. Now, if you're basically entering that stock as an intraday trader and the stock doesn't move at all, how do you wait for a bigger price move to get a higher trade efficiency ratio? That's self-defeating. So picking up the right kind of stock is a must. Now, latching on to big move stocks is important, and weeding away those stocks which have small moves is super critical. Now remember those 5 stocks that I give you which are high impetus and 5 stocks which are low impetus in my weekly market outlook video? Try to trade only those stocks which are high impetus, which means which they really move. Do remember what I tell you in those videos. These are high impetus stocks. Take a smaller exposure, wait for large price moves, because this is how you'll make more amount of money, and the trade efficiency ratio will also be higher because you're trading fewer times, but you're catching the bigger absolute rupee move out there. Now, this is a problem that's sorted out. Some of you might ask me, Vijay, if you're telling us to take high impetus stocks for trading, isn't it also true that high impetus stocks, because they make large moves, can also result in large losses if the trade was to go wrong? You are absolutely right if you think so. And thank you for being quick on the uptake in guarding your flanks. This is a problem, and just like I said, my videos are about solving all your trading problems. I have a solution at hand which will adequately take care of this problem. Remember this video, which you're seeing the thumbnail on the corner of your screen, wherein I've told you which direction to trade in based on the snapquote window. The snapquote window is the window that comes up when you highlight any security in most trading terminals and click on F5. The syntax is F5. You must take the direction right. If it's a rising stock and you're going to short it, hey, you're going to lose money. If you're a falling stock and you're going to buy it, then again you're going to lose money. So you must be in the right direction of the trade. In this video, I've explained to you how in the snapquote window, if the LTQ or the last traded quote is consistently above the ATP or the average traded price, you must not short this counter, you must buy it. The reverse is true. The LTQ, the last traded quote, is sustaining below the ATP or the average traded price of the day. You must short that counter because the last traded price is below the ATP and staying there. This is not a counter that you should be buying. So get your direction right and pick up those high impetus stocks and watch your trade efficiency ratio go through the roof. All right. Now, I hope I've laid your mind to rest. Now let's get down to trading, getting the job done together, hand-holding each other, and realizing our dreams of being professional traders. What I want you to do is to share the profitable experiences that you've had in the comment section with the other viewers of this video, and tell us how my video helped you garner higher percentage profits. Friends, my video is to help you become better traders. If you still have doubts, my contact coordinates come at the fag end of this video. Do connect with me. Let's connect with each other, get conversations going, help each other become better traders. You have any doubts, give me a shout and I'll get back to you ASAP. All right. Before I wind up this video, a gentle reminder to subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put up out here. Good, bad or ugly, I'd love to hear your feedback in the comment section. And please help me reach out to fellow like-minded smart investors and traders like yourselves by referring my video in your WhatsApp groups, your social media groups, your friends, your family, and let me reach out to a wider audience of people who are hungry for knowledge. I thank you for your patience in sticking around with me in this video, and I stand by my commitment to you that my videos will make you far more profitable traders. I wish you have a very, very profitable day, my friends. Take care. Bye-bye.